Okay, good morning, everybody. How you doing today? Enjoy the rain? Yeah? I don't know why. We're starting late. Montgomery College started late today. I assume it's because that's what MCPS did. I don't know why MCPS started late. My wife and I are looking outside, and it's about freezing. I don't know what they're talking about. But whatever. I'm glad you're here. I'm glad you're safe. What we're going to do today is move on to economic systems and apply the ed puzzle that was assigned. What did we talk about last time? Supply and demand. Specifically, what about? Just the end. What about supply and demand?
That supply is marginal cost.
Supply marginal cost, demand marginal benefit. Great. Go ahead.
We were talking about like what causes like the supply line and the demand line to like shift. Some of the reasons I think demand is like taste.
Yeah. Yep. Nice catch-all category. And as an aside, while it looks like a straight line. We call them curves. I know they're not curves. It's weird, but there's weird history there. But just even though it's a straight line, we call them curves. You're absolutely right. So taste was such an example that could shift demand. What else shifted demand? Anyone remember? It's been like 2 days. Yeah, Kevin.
Number of consumers.
Number of consumers can shift it, absolutely. Great. Anyone else? Yeah, with the back. Income. In what way, Taylor?
Like the normal goods and services income. If it goes up, then the demand goes right. And then goods and services income. When it goes up, the demand goes up.
When income goes up.
Yeah.
The demand goes right for inferior.
Yeah.
So when the organization on that is income matters, but how income matters depends on what kind of good, if this is inferior good or a normal good. And absolutely right. Yes. Complementary goods are related to that. So there's complementary goods, and the flip side of that is Santiago. Substitutes, yeah. And so how does complementary goods factor in? Because it's not technically complementary goods, it's with a P. Price. What do you mean, Fatima? Yep, the price of those complementary goods, right? The goods that are consumed together. And Santiago, what's the substitute?
The price of one goes up.
Why is that?
Because
No. Opposite of that. They are substitutes, right? The price of one goes up. The people are like, I'm not going to buy that thing. Thus, I'm going to buy this other thing instead, right? They replace each other. That's why the demand goes to the right, expands. But I like how you use that term, right and left, right? So again, I encourage you to think in terms of right and left. If it's on the right, that means it's going to expand the market. It's going to get larger, right? The quantity is going to be increasing, whether you're shifting supply or demand. If it's on the left, if it's shifting to the left, it means it's going to shrink the market, whether you're doing supply and demand, right? Quantity is going to be lower. What were the supply shifters? Yeah. Productivity is a good one. Excellent. Melissa, excellent. What else? Number of producers, right? So we're just flipping it over with the number of consumers. Opportunity cost. What's the deal with that? So I agree, opportunity cost is on our list, but what is it again? Yeah.
Opportunity cost, if something grows or shrinks, then you're going to be more or less likely to make that thing.
Yeah. Yep, exactly right. And then that's going to overlap with the number of producers, right? Because if the opportunity cost goes up, people are like, I'm not going to do this thing anymore, and thus they're going to leave the market, shift to the left.
Would that also overlap with input prices?
Kind of, but input prices are sort of more explicit, right? It's like, I'm making cars, steel is more expensive, it's harder to make cars, right? It's conceptually kind of the same idea, right? It's costing me more to make this thing. But all of them are about cost, and you make the thing, because as mentioned, supply is just cost. So we're shifting it up or down. And then, of course, right under that as well, taxes and tariffs. Calling it same taxes and tariffs is, of course, redundant because the tariff is a tax, but it's still helpful to bring up because people sometimes forget. All right, any questions about that, what we talked about last time? Good? Okay, so today what we are going to do is then dive into the different economic systems. Broadly, we define them in socialism and capitalism. In order to really understand, though, these different systems and the fundamental difference between them, we must first understand capital. In business, capital is usually referred to as what? Money. Can you give me an example? Emily, did you say that? Yeah, so could you elaborate?
Like, what's capital?
Yeah. What are they like what's the scenario where they say, oh, we have capital?
I'm just gonna use that. So I think it's like you own like supplies or equipment.
Yeah. So usually in the context of business, right? If the business is going to start, one of the first steps is to get capital, to get money. And they need that money in order to do, as you mentioned, they need to buy the inventories, they need to buy the equipment, they need to make those initial investments to get the business started. In economics, then we're just going to skip right to that point. We don't think of capital, we don't think of money as capital, but we think of the means of production as capital. Capital in economics is a durable good. Used, well, actually, technically, I say durable asset in the notes. Durable asset used to produce goods and services. Now, that phrase durable, though, has particular meaning. What do I mean by durable? Strong. Yeah, okay. Anyone else? Yeah. Long lasting. Awesome. Not consumable. Okay. So note there is a distinction, technically, between long lasting and not consumable. Imagine my business is a restaurant. And as part of the things that I offer, I am going to, need rice. So I buy a whole bunch of dried rice that I will, of course, cook as necessary. Now, dried rice, how long does it last before it expires?
Yeah.
Right. Yeah. Right. It can hold rice out for a long time. Right. I don't know exactly the limit, but we have rice in our house that I got like 10 years ago. I still use. It's fine. Is it capital?
No.
Why not? It lasts a long time.
It's not a durable good.
Well, why? But it doesn't durable. Didn't we just say durable? It's like lasting.
No, it isn't. Like, because you can rice and once you consume it, it's gone. But you can use an oven, but once you use the oven, you still have it.
Excellent. Did everyone hear that? Right. The idea of durability is it can be used over and over again. That is not the same thing as it lasts a long time. Lots of things can last a long time, but once you use it, it gets used up. You can't use that same rice over and over again. That's gross. So durable in economics can be used over and over. Of course, all things wear out. You have a pencil, you can use the pencil over and over again, but it doesn't last forever. Eventually it falls apart. Eventually there's no more graphite in it. I talk about like a wooden pencil. Is that capital? A little weird, right? Like, if you can use something twice and then it's done, is that capital? A little weird, right? To include that. So we need some sort of rule, and so in the notes, I guess one of the books suggested this. So I'm like, okay, it's kind of an arbitrary line. for at least 3 years. Ovens are capital. Computer programs are capital, right? So if the business is some sort of app, for example, you need to hire some sort of programmers in order to get the system set up. Well, that code is going to be capital. It's going to be used over and over again. It doesn't diminish. Information, knowledge is capital. R&D research is capital. The logo, the equipment is capital. The ingredients are not. Good. Yeah.
What about cash?
Well, the cash in and of itself is not used to create goods and services. Cash is used to buy things to create goods and services.
You wouldn't consider that cash?
I think if we were to think about the assets of the business, obviously you would include cash as an asset.
What about securities, stocks?
So that just represents the ownership of the business.
Well,
So technically every stock in a company represents. Okay, let's try it again. Maybe a pause, I'm not sure. All right. So capital is the durable asset used to produce a good and service, and it can be used over. Durability is something that can be used over and over again, lasts at least 3 years. The distinction between socialism and capitalism is about ownership, and that is the fundamental difference between the two. We do not want to say, well, socialism is when everyone has their basic needs met and everyone works hard. It's like that's the goal, but that is not that's not the rule. You can't define a system based on its goal. That's like saying, this is democracy is good if people get what they want. Like, if a democracy is defined as when people get what they want. It's like that's not that's the desire. That's the motivation. But we have to define the institution by its rules. Socialism is defined as capital as publicly owned. Because who owns the capital is another way of saying who controls the capital. And who controls the capital are the group that makes allocative decisions. If the state owns the ovens, the state can determine who uses the ovens, how much they have to work, the quality of ingredients that go in, the quality of the product that goes out, how much do they produce, and maybe even where they deliver the stuff to. Well, definitely where they deliver the stuff. Under socialism, the capital is owned by the government. Yeah.
If a bank's service is lending money,
Okay.
does that make cash or capital?
Oh, that's a good question.
And then, to further go on that, would that mean a bank in a socialist economy system would be saying that the cash is publicly owned?
Yes. And I would say, yeah. I mean, in that case, then the cash itself is the service. In addition to, providing risk and so forth, but shouldering risk, But yeah. And then in that case, then, in a socialist system, when we say a socialist system, we're talking the government does indeed own everything and make all allocated decisions, then the bank, or what would count as a bank under these circumstances, would then be owned by the government. Right? It would be counted in their assets. Okay. Capital is publicly owned. Now, in order to do this, that means that there must be some sort of central planning board. To make decisions. In theory, I suppose you could leave it all to voting, but voting is just going to be impractical, and as we will discover, there's just too many decisions to be made. So generally, there's some sort of central planning board board that makes the decisions, and then there's this giant hierarchy, and then people below the hierarchy execute things, and the people below the hierarchy execute things, and there's more and more discretion as we go down. Additional discretion as we go down because the central board can literally handle every single decision. Now, I want to emphasize the temptation is to think in terms of dichotomies. That this country is socialist, this country is capitalist. And that's a useful thing about language. Language is categorical in that way, but reality is incremental. And even in countries like the United States, there are socialist sectors. Can anyone think of a part of the United States economy that is where the government owns the means of production? Welfare. So, but what's being produced, right? We want to also don't want to forget this part, right? We're producing some good or service.
Public education.
Public education. Specifically K through 12 education, right?
Yeah.
Because we don't want to say public education because then that, by definition, like if it's a small part of the sector, then it's like, well, that's not a big deal. But I specifically pick K through 12 education. That is something that could either be public or private. In the United States, it is overwhelmingly public. The government back and forth. Yeah, exactly, right? In other words, it's very hard to figure out how to incentivize people to serve the people well. It's hard to get decision makers to serve the people well. In economics, we call this the principal agent problem. If you take micro, we discuss it in more detail. But generally speaking, there is this divorce between what the individual might want to do and what society might want to do. Not necessarily a knowledge problem, but just, like I know the best thing to do is to, like maybe send this milk to the baby formula factory so it can be made into baby formula. But I personally want to get the very best cheese because my wife really likes cheese and I really like good cheese. And so we're going to send it to the cheese factory. And then in return, the person who runs the cheese factory will send me the best cheese. Right? In other words, corruption. Now, corruption is going to occur, right? These occur, both the knowledge problem, it's hard to figure out the best use of resources, and the incentive problem, it's hard to get people to do the thing you want them to actually do. It's going to occur all the time, whether we're talking socialism or capitalism. The difficult part about socialism is it takes these problems to the nth degree, because there's just one giant organization. If these kind of problems occur, the ones that we talked about, or if somebody is saying, oh, there's a story of a friend of mine, way back when, he used to work at Best Buy. And he would tell these stories about how people would ask him where things are at the store. And he would have no idea. But he would just go into the store. It's like, I'm in this corner. They want to know where the, cords are, the HDMI cords. I'm just going to pick the opposite of them. And therefore, and then by the time that they go there, they come back and realize I was lying. I'm not there anymore. They can't find me. It's a big store. Right? Or somebody was telling a story about how in their retail store it's so large that you can just kind of hide in the break room and management won't know when you can just sort of diddle it. Somebody was saying how they just spent time in their car during their work. But you don't know. Right? Now, that occurs on the relatively small scale of a company. Imagine a much larger scale of a whole company. It just gets bigger. I don't think I want to do it all the way over here. I want to center it more. We don't need this. To illustrate this knowledge problem and this incentive problem a bit more, let's dive in a little bit more into how this might work in practice. Imagine it's, I don't know, 1960s USSR, and you're in charge of all milk production. You are the milk czar, so to speak. And your job is to take this milk that is produced in countless individual dairies all over the country and send it to the many different factories that could use the milk to turn into useful products. What are the kinds of things that milk can be used for? So baking, we can imagine it can go to bakeries, bread, pancakes, something. Yogurt. Another one. Cheese. Another one. Ice cream. I usually like to do at least 8, so I need 3 more. I mentioned one of them.
Like coffee.
Sure, like creamer. We should draw a distinction. Are you talking like it goes to coffee, like Starbucks, like coffee shops, or it goes to the creamer factory?
I mean, both would work, right?
Yeah.
Starbucks also just.
That's true. So we can just say it's just like it can just be carton, right? And also I mentioned this, so maybe formula. I want to emphasize every time I do this, I get a slightly different set of goods because milk can be used for lots of different things. We need dry milk. We didn't include cream cheese. We didn't include sour cream. Lots of different things it can be. Now let's imagine winter. Winter is over. Summer is coming, and so you rationally think, okay, the people of the USSR are going to want ice cream. I am going to send more milk to the ice cream factories. Set aside the fact that we don't know how much sugar they're going to also be able to secure or other ingredients they need to secure. Let's just assume that they can do that in sufficient amounts. Let's also assume that we know where the good factories are and where the bad factories are. So I want to emphasize, I'm simplifying a lot here. I want to focus on one question. If I'm going to send more milk to ice cream makers, where am I not going to send milk to? What is going to be reduced? What do you want to say? So it's just everything else should be reduced proportionally.
Yeah, just everything wants to.
Why? Like screw the babies, like whatever. We don't care.
No, because there's only a certain amount of milk. So if you're
Yeah.
giving it to the ice cream, right?
So so I'm saying more ice cream over here, which means, but like, why don't I just reduce a lot of cheese? Why are you saying everything a little bit? Why is that correct?
Oh, sorry, asking like why the decision maker chose ice cream.
Oh, I know why they chose ice cream. I'm assuming, right? Summer is coming, and I'm assuming it makes sense, right? This makes sense, right? We're going to assume we know exactly how much ice cream we need to increase. We're going to assume we know that the ice cream makers are going to have the other ingredients they will need. We're going to assume we know which various ice cream makers we are going to send it to, and that makes sense, and they have the capacity. And we're going to make lots of different assumptions of knowledge that we know. That in itself would be complicated. I'm asking a simpler question. If this place is going to get more ice cream, where should we take ice cream out of? Well, I'm sorry, this place is going to get more milk. Where are we going to have less milk? Where?
Oh, you want us to pay?
Yeah, we got to make allocated decisions. Right? We have to make those decisions. Remember, economics is about the allocation of scarce resources. You want to say fewer bakeries. Why is that the right answer?
Because ice cream is a dessert, and pastries are a dessert, and usually when it's hot, people get.
So you think the substitution story. Yeah, Grace.
Can't you just take away a little from every other thing? That way you can they don't lose a lot.
We can, but we have to justify why is that the right answer?
Because if you take away if you take it away from cheese and most of it, then there will obviously be less cheese, but everything else will be fine. But you take away a little bit from everything, that it's gonna go like a little more balanced.
So you're actually invoking. I think you're subtly invoking an idea we talked about. We know what idea she's talking. What she's probably invoking? Diminishing marginal utility. So you're saying like, if we have X amount of cheese and Z amount of baby formula and Y amount of yogurt, getting rid of a lot of yogurt is going to hurt people a lot, right? Because each additional unit of yogurt consumed is less than valuable. So you're going to go pretty far up the priority that they won't be able to do anymore. But if you take away from a little bit from everything, then by definition, those last units you are taking away are the least valuable. Right? Is that what you're thinking? Yeah. I think that's what that's what you had in the back of your mind when you were doing that. It's like, yeah, it probably won't be as harmful. But we have to be careful because these are very different, right? Like cheese can last a long time. So maybe there's a fair amount of stockpile of cheese and we don't actually have to, like, we can reduce it a lot and people can still consume muffins. And of course, like if there's a change in weather, then maybe some things, as noted, might not be as valuable at the same time. So maybe like, do we really want to say, well, only one baby goes hungry? Like, because like even if like it's the least valuable option, that doesn't mean it is less valuable than the other ones. And it gets tricky. Yeah, go ahead.
Why wouldn't they just manipulate the price of ice cream so that they can continue to allocate the amount of milk everywhere?
Okay, so we're going to actually talk about that. They had prices in the Soviet Union. These prices were just invented. And so the question is, why don't they just make the price correct? It's like, well, they don't know what the right price is. You can say the price goes up some, but how much should it go up? You don't know. And you can say, well, you can argue that it should be bakeries, or you can argue that it should be baby formula. Because, baby formula, like, okay, sure, baby formula is helpful for kids, but it's not necessary because there are substitutes for baby formula. What's the big substitute for baby formula? Breast milk. Right. And yeah, okay, you use cow milk for cheese, but you can use goat milk for cheese. And it's like, while it's hard to make yogurt without milk, there are substitutes for yogurt. So there are substitutes for the inputs. There's substitutes for the outputs. There are substitutes for substitutes. And I haven't even gotten onto the third option another option we could do is maybe we should just expand milk production. We can do that well. What would be necessary to expand milk production? We need more cows, right? Which means what? Right, so we want to focus on the actual product. Yeah, Emily, what did you say? We're going to need more land. But it's not like there's a bunch of land that's unused, which means we are going to say, okay, fewer sheep being raised, more cows. Fewer people working construction, more people milking cows. Less hay that goes to pigs or whatever pigs eat, and that hay should instead go to feed the cows. We are still making allocated decisions. You can't avoid them. And my answer is, which is the right one? And the only reasonable thing that you can respond with is, I have no idea. That's the point. Nobody knows. Nobody knows what the right allocation of resources is. Because all the relevant knowledge is like maybe like there is, maybe they know that, like we have cartons, but we can make almond milk too, and people actually like almond milk, right? And the milk producers don't necessarily know that. Yeah.
Why don't you look at like previous, it's like from last year, this how much you used, and based off last year, we get more ice cream.
Yeah.
And then, maybe for last year.
And you can get clues from previous data. But companies do this all the time. Companies, even though they look at previous data, do they always get everything right? No. Because every year is also different. We talked about this when we did supply and demand shifts. Right? The weather is going to be different every year. Maybe there was a disease that hit somewhere that hit the goats, and so therefore the goat production option, the goat cheese option isn't really an option anymore, and we really need that. Or tastes have changed, or the complement prices have changed, or people are working harder, or there's been a really bad drought.
You can get clues, but every year is different. And the knowledge is constantly changing. And the knowledge is hard to convey. And this is why I'm kind of glad it was brought up tacit knowledge. There's some knowledge that can't be included in the data because it's hard to convey, it's hard to articulate. Any questions? Yeah, go ahead.
So, this is demonstrating knowledge problem?
Yep. And it's also, and as a side note, it's like I mapped on the knowledge problem. I assumed we were virtuous. I haven't even gotten to the incentive problem. And I'm going to be like, well, maybe I don't really care about babies. And I'm just going to like take it from them because the person who did the baby formula didn't like, you know, was supposed to give me something, give me a bribe, but he didn't. Right? And other people bribed me. Right? And this is what I cut out. And so then and because it's not obvious what the right answer is, it's not clear there was corruption. Right? And I say, look, people can use the breast milk instead. This is good. Breast milk is actually better. And then I take it away from them. Right? Because they didn't give me a bribe. Any questions? So, this leads us to capitalism. If socialism is that capital is publicly owned, what do you think capitalism is? Exactly. And because of that, rather than having a central authority, decision-making is decentralized. Rather than having one giant organization, rather than having one giant milk czar, allocate decisions, we have lots of individual milk producers. Some of them are really, really big. Some of them are small. And we have also independent baby producers, baby formula producers, cheese producers who produce lots of different kinds of cheese, yogurt and bakeries and all that stuff. And there's a trade-off, of course. There's virtue and there's advantages to being a large organization. You get economies of scale. But there's also disadvantages to it. Yeah.
I actually have one question about the socialism system.
Yeah.
Because I feel like if you really think about it, wouldn't the bribery system be the most? I feel like it would be the best for the people if they don't know that the corruption is going on behind closed doors. If you tell them, well, better for the kids anyway, we don't need that much baby formula, and they kind of just go along with it, then wouldn't it be best because they're now just in a different sense of belief that they're getting what they don't need anyway. So why do they need
the problem is sometimes they do need that. So there are issues like breast milk is best for the child. Sometimes there's trouble with the mother producing milk. There is trouble with like maybe the kid just won't latch on for some reason. There's actually lactation consultants to help with that, but sometimes it doesn't happen. And plus, at the same time, too, breastfeeding is exhausting. Breastfeeding takes up a lot of time. And at some point, it's like, while breast is best, especially in the beginning of the kid's life, as they get older, the advantages go down, and then the costs of constantly pumping go up. And if you know somebody who has a kid, especially a small child, you see what they mean. So to say, well, for the health of the baby, it's always good. It's like, well, but there are other costs involved, and there are trade-offs. And so we don't want to say universally this is always what everyone should do all the time. Right? Sometimes you have to watching. Itself is exhausting, right? When people say, well, breast milk is better too because it's free. It's like people who say that the value of a woman's time is zero. Because it's not free. It costs time. It doesn't cost money, but it costs time. That's my little, I don't know if that's the question. It's complicated, right? The world is complicated. There are trade-offs. So, well, we still have these problems. We still have this knowledge problem. We still have this incentive problem. How does capitalism solve the problem? And capitalism solves the problems in the same way that the knowledge problem was solved in your ed puzzle. What happened in the ed puzzle? And the people decide?
When
The fake money, yeah, specifically, there was a market. Did you also want to add?
Yeah, because the decision
Mm-hmm.
the individuals had.
Yeah, and so because it was decentralized, people could rely on their own knowledge. And and I love how they talk about like the prices that occur in our little Feed America market are very different than the prices you see in the normal market. Remember what were the really valuable things? Cereal, peanut butter, right? What were the things that are pretty cheap? Milk. Right? Why?
Perishable.
Perishable? No. Perishable, right? They had to have this huge infrastructure, right? That not everyone can do that, which is great. Note what happens. Note what's going on. Market prices do two things. And when I say market prices, I mean prices that are discovered by the interaction between consumers and producers. Not prices that are set by some government. Those aren't market prices. Prices that are discovered. And I emphasize that word discovery. Prices convey information. The price conveys information. We talked about this before. When I like two houses, and one house is really cheap and one house is really expensive, which house do you think is in better quality? All things equal. The expensive one, right? Prices convey information. And so if we see that cereal is going for a lot of money, that's telling us cereal is very rare. If we see that milk is very cheap, that tells us there's quite a bit of milk. You know what's also great about prices? They what? They change. And so they change based on the various knowledge. Right, you're absolutely right. But the prices not only convey this knowledge, and they not only stay updated with the latest knowledge. They incentivize action. Why was this episode called The Pickle Problem? Uh-huh. Why is a bunch of pickles a problem? Yeah. Which, by the way, is like a puzzle. Like, why are they ever made in the first place? People don't like that many pickles. But, I guess they're good as a garnish. Right? Some pickles are fine. Most pickles, I guess, are not for most people. But yeah, like, what do we do with all these pickles? We could just send them to somebody, but we don't know the best place to send them. We can, and no one has an incentive to volunteer to take them because they don't know what to do. Do you remember how much, I can't remember if they talk about this, how much do pickles go now on the market? That market they did.
Negative.
They were negative. We will pay you to take these things. We don't have an incentive to take them. And the person who's in the best position to be able to figure out what to do with them will now have an incentive to act on that knowledge. They learned that there's apparently a lot of, not very many uses for pickles. So even if they're new to the game, they can use that as a clue that something is going on with these pickles and maybe I should be careful about if I'm going to get them. But I do have an incentive to gamble. I do have an incentive to try it out. I do have an incentive to figure out how best to use them. Milk is really cheap. You know what that gives me an incentive to do? Maybe invest in a giant refrigerator. Right? And so therefore I can maybe take advantage. It's a big cost, but it will pay off in the long run, and I now have an incentive to act on that knowledge. Especially if I've learned that maybe I know that people in my particular area really like milk and cereal, or really like to do things with milk. And so I will use this, and I have an incentive to sort of act on that. And I can use that money maybe to invest, because I spend less money on food. Prices solve both of these problems. Prices will even solve this problem. Okay, rather than figuring out how much ice cream, yada, 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 we're producing milk. We know that summer is coming. So it's not me deciding to send my money to ice cream makers. It's ice cream makers saying, hey, we want to buy more milk. What happens to the price of milk? It goes up. So then, what are all these other individuals saying to themselves?
Upper prices too.
They might do that. They might what? They might increase their price. They might increase the price as well. They might also buy less. Why? And what determines which one they do? The incentives, right? Right? Do they think, right? Because the bakers know their market best, right? They know their market best. And they say, milk is getting more expensive. I don't know why milk is getting more expensive. I don't need to know why milk is getting more expensive. That's crucial. I just know milk is scarcer than it used to be. Do I think that I can still make a profit if I buy as much milk as I normally do? Do I think that my customers will tolerate a higher price for stuff? Or maybe I should just make fewer cakes. Maybe I'll just, buy less milk and try to find some sort of substitute for cake instead that I could sell that doesn't require milk. Or maybe I know that my customers really do like my stuff, but I will use almond milk instead. I know from experience that works. Knowledge is decentralized. The relevant knowledge is all over the place, and we need incentives for people to act on it. And so I don't know exactly how it will adapt. It's going to depend on all the different impacts. And if it turns out no one says, no, we all want the milk, and the price of milk goes up a lot because everyone wants the milk, then that means as a milk producer, I have information. Well, maybe it is worth it to invest in expanding my milk production because I'm constantly getting my orders exhausted and the price is going really high. Remember, if you increase the price, you increase the quantity produced. Supply curves. Prices solve problems. Yeah.
Can you explain again how prices convey information?
Here's what I like to say. Prices convey information because prices are measurements of scarcity. If the price of something is very high, it's telling you it's quite scarce. If the price of something is really low, that means it's, I don't want to say not scarce, but low scarcity. I talk about this a lot too. I think I wrote a piece a while back about income. It's like, well, income is the price of labor, and some incomes are high and some incomes are low because the labor for that is relatively scarce or relatively not scarce. Supposedly, like when you have kids, you're like, they're the most valuable things, and you wonder why are like child care professionals paid so little? Like the people who work in daycares, I think get paid very little amounts, 30,000, 35,000 a year, or something like that. It's very low. And it's like these people are trusted with our kid. Why are they paid so little? And the answer is because lots of people can do that job. I'm not saying it's easy. I'm just saying while it is hard, it's hard in the sense that it is exhausting. It is not hard in the sense of like few people can actually do it. Lots of people can do it. So there are lots of people who are willing and able to do the job because taking care of kids, they're really cute. Just pooping, I know, but they're really cute. And there's some demand. There's not a great, huge demand because, there are substitutes, right? People can take care of their own kid. People have relatives they can watch. Some people don't have kids at all. And so as a result,